Hello, good afternoon and welcome. My name's Kevin Igo, Director of PFP, and I'm pleased to be joined today by Paul Blackman of BHP, who's going to talk to us following the advent of Brexit on importing and export and international trade essentials. So, Paul, first of all, if I ask you to say a little bit about yourself.
Yes, good afternoon, everybody, and thank you, Kevin. Obviously on the screen, but that's always a little bit cold. My name is Paul Blackman. I'm a business improvement consultant, both independently and for BHP. I specialise in manufacturing, retail, logistics and warehouse. So under that grand heading, I become the subject expert on import and export, as I have done for a great number of years, which is not going to give away my age too much. I've in previous life and currently I've created working models for UK and international blue chip companies, held senior roles in the UK and Europe, running businesses and specifically for commercial trade. I'm also a long-term chartered member of the Institute of Logistics and Transport, so it gives me insights into how the industry runs and why it runs. So I don't necessarily come at everything from a logistics point of view, but I do understand the best practice and why businesses do what they do. But there we are. So, Kevin, if you will.
So as we go along, if anybody has any questions, put them in and we'll ask them as we go along, or maybe at the end to see how many we get, and that's fine. We will be sending everybody a copy of the notes and the slides afterwards, so you'll have a copy of those. So over to you, Paul.
Okay, thank you. So what I'll try and cover in this hour, of which I don't apologise, I'm going to try and cover quite a lot. Really, we're not in the same place as we were. Now that sounds like a fairly obvious statement, but I think so many people took on the idea that as of sort of January the 1st, we were still going to be trading the same with Europe and everything was going to be the same. That is just not the reality. The reality is that we had a trade and cooperation agreement, which lots of the elements of it you could define as a free trade agreement, i.e. no tariffs and no customs and no barriers and everything's lovely and wonderful. The reality of it is, to achieve that, you needed to do lots of different things, and probably differently than anyone had done before, unless they were particularly into it. So the background is that it certainly affected our trade. It certainly affected how people view the trade, and it's given people individually different problems. And added to that, it's also really important to say that our European partner countries have all adopted things slightly differently, and that is what has caused so many of the problems. But against that sort of framework, there is a way through it. There's a positive way through it, and hopefully I'll cover some of that today. So please, Kevin. So if we look at the subject of importing generally, you know, it's all part of international trade. We have a desire by our government to grow international trade, and a lot of businesses for a lot of years have thrived on importing products from various places. So if we just put some little stats around this, which is sort of against the problems. UK imports are about, as at December last year, which is a sensible place to take it because we don't have too many of the effects of Brexit and COVID hitting it right away. About 49% of imports were coming from the EU. But the interesting thing is that food is not in the top 10. So sort of things that are in the top 10, for example, are things like precious metals, machinery, vehicles, specialist electrical material, pharmaceuticals, optical, and the list goes on, but it doesn't include food. So when we look at all that, it's no surprise that, you know, difficulties have asked businesses different questions, and one of the questions that has come out of it is looking at their supply chains to consider more onshoring, i.e. in the UK or closer, or overall seeking supply elsewhere. So big question is why would they do that? Well, one of the things that's also at the back of all this, unfortunately, is COVID. And as we do import so much from the Far East, and particularly from China, there's been like a five plus times multiplier on cost of containers if you can get one. So for a long time, you know, containers are sort of £2,500–3,500. They're now easily £10,000 to £15,000 if you can get one, let alone the deep joy that happened in the Suez Canal just recently. So you can see there's a massive cost pressure going on to importing, which is actually the reverse of where we were, say, 20 odd years ago, where everyone saw the great advantage of moving to the Far East. They're now, I say they, the larger businesses first, and possibly the smaller to medium-sized ones, will start to look at supply of more on a more localized basis, and those countries that are able to supply are gearing up to do so. So the TCA here, the trade agreement that we have, has really sort of brought this to a head. So it's brought up things like the extra documents, the extra country of origin, and very much sort of started to get people to question the costs of importing more. So if we take the cost of importing just for an example, I'd split these into what I call legislative type costs, and that's the duties, taxation, and potentially specialist licensing needs. And then there's the sort of business needs that go around it. You know, I'll just headline them without going into too much detail. Your transportation and support costs, as I touched on, you know, that's at a 5 times multiplier. The quality and compliance costs, well, that's actually starting to rise because people are needing to cover different things on their exports, which I'll start to touch on. The purchasing and contractual fulfillment side is also being questioned, because where it made sense to say order a container of goods where you might keep that container's worth of goods for a number of months, cash flow is obviously under pressure at the moment, as we understand that, you know, the UK economy is where it is because of COVID. So add all those things together, you end up with pressure on your inventory. You end up really needing to look very carefully at your currency variation. You know, are you going to get a lot of shocks? If so, what you're doing. And with all the things that are coming along, do you have the management capability? Do you have the management support? And do you have the willingness to actually take it on? So great point of note here is that your audit and compliance side of your business, and particularly on the financial side, this should be now more of a value add than ever before, because that will be guaranteeing you using right things such as Incoterms, which I'll touch on, you know, optimizing your process and absolutely ensuring you're not tying up too much cash in your business, i.e. you're making your business very flexible. So we have as a nation become used to being a nation of importers, but it's not only the way that you can carry on. So I would suggest strongly that the total cost calculation now is more relevant than perhaps it ever has been, as businesses review their options and what gives them the best view. So just touching on that, then that means that things like supply agreements that are an absolute must, they must be really checked and are linked to your demand needs. If your demand is variable, you want a way of actually structuring your supply. You don't want loads of imports coming in and further draining your cash. So your supply agreements must have that flexibility built in. they must also have this underlying point of review and a way to remedy the process. That doesn't have to just be a legal hard punch up. It needs to be a defined relationship with your suppliers, and I would suggest that that supplier relationship needs to be different than perhaps it's been for many before. So you end up with break clauses in your contracts. You've got to have a massive point about your brand protection, because you might choose to be pulling away from long-term suppliers, you might not, but you want to make sure that you're not in danger of damaging. So backdrop of all that, import, fantastic, but you don't necessarily as an importer need to do it the same way, and you certainly don't need to be closed to the idea that change is really your only constant, and it's the best way of protecting your business and your cost base. So thank you. Kevin, please. Thank you. So if we just turn a little bit to export to join the things up in a sort of general structure. Again, a little bit of background. Exports are very much being seen as a national growth plan. It's absolutely no secret. We have a government racing around trying to make trade deals. They have got a structure in place which for dealing with Europe and related to the Brexit side, basically all of the documentation will be finalised in July unless there's a major trauma, but that's the plan. The reality of that is that businesses then will be very much expected to deal with things themselves, and they probably should be able to. The reality is they probably won't. So that's one of the reasons why people like me exist, I suppose. But the underlying point is that we need as a country to sort of build up our exports, to start to grow the economy. And if we take the point that opportunity absolutely abounds, I've been involved in a number of discussions with DIT and others for a variety of reasons with international partners, and a lot of the things are they being the Europeans, for example, want to start exporting into the UK to allow the UK suppliers to add the parts and whatever to continue the outgoing export. So they are wanting to be a supplier, i.e. on the import side, to allow their commodities or products or whatever to join an export, as they see the UK being quite an export expert, shall we say, and a real opportunity. So I just would like to make the point that your ability to export does not automatically confer the right to import. And what I mean by that is that so many countries have individual licensing requirements, they have individual needs, they have individual structures of which are variable. These are all things that can be discovered, but for a lot of years, particularly into Europe, where we just were able to just send it and absolutely fine, that has gone. So if you are going to export into Europe or worldwide particularly, it does not mean that your customer can import it, no matter what they say. Remember, the responsibility is with the exporter, and the simple way to say that is it's your goods that are held up, it is your payment you're not receiving, and it's your cost to get it sorted. So there's a lot of things there. As a backdrop to that, about 10% of UK businesses currently export, so that's what the government's trying to drive. And if we look at the opportunity countries, they're very much in sort of mixed around to be in the Far East, Singapore, Japan, and Asia in general. Russia is a massively untapped market. They're all there, which is the reason why there's so much going on. But without an effective trade deal in those countries, it's going to be very difficult. So if we look at that holistically, export, great opportunity, but it's based on research, consideration, and taking time and getting expert advice to do it properly. So a bit of a scene send export. Kevin, please. So if we try and sort of go back and sort of look a little bit on import in a bit more detail, and I'll do a little bit the same on export as we go along. The problems that have sort of manifested themselves are these really. So many businesses have failed to understand the requirement of the EORI numbers. If you're going to import or export, you fundamentally need a matching set. It is not the business VAT number. Many of the documentation issues that are arised in UK ports and massively in European destinations are because the ERI set does not match correctly. Bluntly, you know, it's in the UK customs interest to try and get the shipment moving, but if there's any opportunity or any potential problem in the host country, it's going to go to the back of the queue, and that could be for days. So big issue there. The other one is misunderstanding around commodity codes. Every single product has a commodity code. They're not the most simplest thing to read, but they do exist. So if you're exporting, your commodity code will have 8 digits. If you're importing, it have 10 digits. They're available through the government website. There are useful websites to allow people to say, you know, tap their product, type in, and it will tell them what the commodity codes are. But they're country of origin. Again, massively complex. This has become because this defines where you are on your duties and so on and so forth. It's based on your commodity code. It's based on what you do with it, but I'll touch on that a little bit later. The other interesting thing is, which has been manifested, people have not included full detail on commercial invoices. So there's never enough detail you can put on a commercial invoice when you're shipping. And remember that if you're shipping goods and it's going through multiple countries, it is not unusual that each country will want a copy of a commercial invoice. Again, this is the point about individual countries doing what they want. So advice to anybody importing, exporting, make sure the commercial invoices all line up to all the details required. If in doubt, add more. You know, it just gets you through that point. So data upload, the government uses a variety of data upload points, which are very well structured, but they are not for the faint-hearted, shall we say. They are very much aimed at specialist knowledge. Yes, you can do it, but it can take you a long time. Without it, if you're not pre-registered properly or your documentation doesn't confirm fully, expect to have problems either inbound or outbound. So I say this at the end lightly with a bit of humor, but it's very important. Specialists. I always say to people, if you think professionals are expensive, try using amateurs. And the reason I would say that particularly here is that, you know, not getting your shipments in or out, the cost of that to your business far outweighs the cost of that professional service going forward. So any advice I always give to people is use the right professionals, take your time, and if you are not fully sure of what to do, don't start until you are, because you will be just burning your own cash. Kevin, please.
Yeah, as we go on, we have a question from Keith. Can you please explain why without a trade deal it will be difficult to do export business with countries? This given that we've been trading with the USA for years successfully without having a trade deal.
It's not so much difficult per se, it's more difficult than it would be without. With a trade deal, all the things are defined a lot of the trading with the USA depends on individual commodities. Some of the commodities are absolutely easy and to deal with, other areas are not. For example, without getting into a lot of detail, food, for example, with the USA is very difficult to do, where other things are. So without a trade deal, all I would say is it just makes it more difficult and takes longer. I hope that's answered it.
Okay, great, thanks.
Thank you. Okay, as I'm sort of carry on, if we look at all this, it's really majoring on this point. Have you really understood the changes to your business fully? And that last question sort of comes towards it a little bit, I suppose. And if you haven't, make sure any business does. It should be understanding every implication. Then it can talk to its specialist properly and say, look, I'm thinking of doing this. I want to do this. What does it look like? What are the options? What are the opportunities? What are the pitfalls? Because until you do that, you don't know. So import and export trade has definitely got advantages, and I would be arguing that with anyone, but only if done well. If not, pain is the only sort of output, really. So suggestion to explore, making sure you do a total cost associated versus the benefits. So you've got all the extended lead times and implications, yeah, but you've also got a growing market. You've also got a great way of clearing out, let's say, older products differently, or revaluing product. There's lots of things. That's things to sort of go on and think through. But without your up-to-date supply agreements and that they are compliant and you can rely on them, you are going to at some point potentially have a risk. So if you are a business that needs to sort of structure its supply properly, and all business should do really, but many are a bit more ad hoc, look at your supply agreements, get advice, and make sure that they are built on a relationship basis, not an adversarial basis with your suppliers stroke customers. Because if you do this, you've got the best chance of, whenever there's a problem, you can find a solution to it. Remember, the moment the clock starts ticking on problems, it just starts running up costs, which is what we want to avoid. So I would always say to people, before you export, build a full business case. Make sure that business case includes your structure for how the business is going to deliver it, what the outputs are, what success looks like, and what isn't always obvious is how you're going to use it as a launch pad for growing your business. If it's a plan that ends up, as I say, more than a doorstop, as many of them do, it wasn't worth the time doing it, and it was the wrong format. So I get heavily involved with businesses, helping them do this, but I make sure that it's overcoming the problems that are potentially there by identifying. So other things to consider is, something's not forever. So if you are looking at international trade, always keep it under review. Always look at it, with a little bit of optimism, I suppose, but against the backstop of, at some point, this might not be right for the business. And if you're advising a business, I'm sure some of our audience will be, always be prepared to say, are you absolutely sure this is for you? So, Kevin, please. Right. Incoterms. I will do my very, very best to keep this reasonably concise. Incoterms, International Commercial Terms is the full name. They were created in 1936. They were created by the International Chamber of Commerce to define how business should be done in a structured way that everyone could understand and would remove the subjectivity. The use of them really has been often by people called freight forwarders or shipping agents or customs agents, but reality is that every business should understand the Incoterms. I'll discuss that on a little slide in a minute. But what it also does, the Incoterm defines where risk transfers within international trade, incredibly important for insurance, your cash, and particularly if you are dealing on letters of credit and so on and so forth. You really want to make sure that you are structured properly and you understand it fully. So if we look at a couple of other things that come to this, within any of the business transactions, we touched on commodity codes. So if a commodity code says, you know, they need to fulfill certain things, it might be, you would need to make sure that your Incoterm, i.e. how you're going to fulfill your obligation, matches. And if you are going to do various things to it to recover your duties or what are other things that are around it, and particularly now we're nationally looking to grow free ports, you've got to understand something called the usual forms of handling. That just means what you can do against the commodity code and what you can't. There's massive amount of detail in this. It's not overly daunting, but it must be used and understood. There's plenty of expertise around. There's plenty of people to talk to about it, but I would always say to people, understand it. So, Kevin, if you could just change the slide for me, please. Thank you. So if we take some classic ones. So these are all Incoterms, you know, Ex Works, free carrier, delivered at place. They all define some various things. Some of them define, you know, are they freight collect? So things like Ex Works, FCA, that type of thing, fundamentally means your buyer is paying for the freight. You get towards the other end of the chart, DAP, DPU, for example. You know, I'm not missing them out deliberately, but the seller are paying all freight. The complication comes in that this must be structured properly in your contract. It must be explicit in your commercial invoices, and it must be absolutely clear with your insurers. And that's where specialists like freight forwarders and your customs agents will help. But from a customer's point of view, and particularly for duty and everything else, this needs to be understood. So if this is not defined properly and you end up with a debate, we're back to debates cost money, they cost time, and as this is the world of taxation and duties, we all need to realise that this is going to just create noise and problems that don't need to be. So if we leave it at that, if we move on, Kevin, please. Can the slide change?
Well, you mentioned about advice there, Paul. And one of our questioners had come in and said, HMRC have a link to PwC for advice and a grant for £2,000 to have the processes in place. He's tried to use this, but he's had no response from PwC. Are there any specialists linked to the grant?
That I would suggest, if someone contacts one of the tax experts at BHP, we've been actually handling that, and that's not a loaded comment. Forgive me, I don't mean it like that. But BHP tax experts have been helping with this, and if it can't be accessed through the grant, you can at least pick up a little bit of advice. If you don't want to go that way, a competent freight forwarder, of which there's many, can also help, along with the Chamber of Commerce can often help. I think what's tended to happen, and no criticism of anyone intended, is it's got a bit swamped and it's ended up with not being well. So there are many ways of getting to it, but I would say that chasing down the £2,000, I totally understand. I would suggest it's perhaps more relevant to be absolutely clear what you're doing first, because the £2,000 will be nothing against the size of a problem without getting proper advice. I hope I've covered that for you.
Okay, great, thanks, Paul.
So if we take this very much as a concentration then on export as we go forward, it could be a new approach for many, could be a refocus for some, but there's very much things that we've got to do, and that really is look at this as an opportunity, and that opportunity needs to be done well to allow business to grow. So if we take that as some headings, so I would argue that it's research your market fully, understand all your options for doing it, then understand your Incoterms, have clarity of offer, make sure it's what people actually want to have and it all makes sense, and then really understand your logistics offer, and particularly where your risk transfers, because these are the things that a number of months later or out of the blue becomes a nasty shock. So if we just move forward then, please. So if we look at export of goods and services very much, understanding the market, sounds quite simplistic, but it's quite incredible really how many times this creates problems. And just I'll say research consumer needs. Great example of this is if you have a country that is not a natural of a say a UK product, why would you be sending it? There's quite a common one which has gone on for a lot of years is people have tried to export electric kettles into areas, but for those areas that are predominantly coffee drinkers, they are unlikely to use an electric kettle. So, not really a surprise that what was the best-selling product in the UK is no longer a sort of high-selling item in the market. Conversely, if you're a country that doesn't have lots of carpets, why would you be trying to sell vacuum cleaners that specialize in cleaning carpets? Sounds obvious, but that's the point of understanding the consumer needs. Linking to that, then, the enforceable agreements, you need to be absolutely clear, what countries it can be sold in, what can be sold, how it can be structured. Then that disclosure of information is particularly protected, and then as an output, your product is likely to be the most suitable and going to delight the consumer. If a consumer identifies negatively with a brand, it's going to take a long time for that to be removed, and it could have been as simple as factors: not enough research, not enough thought, and maybe your partners, maybe agents or distributors or whatever, haven't delivered what was expected of them or what you thought they were going to say. So that links to, have you decided and mapped, how you're going to supply? So B2C, it's a business to consumer. The largest player in the market without question is Amazon. Not exactly small. They offer many routes to market for people. Yes, there is a cost of it, of course there is, but they handle the duties, they handle the transportation, they handle consumer contact, they handle reaching out to consumer. So it might be, back to this cost of ownership, that if you're sort of going to supply it and it's a product that's B2C, it might work for you to use Amazon, or some of the others were equally as good. B2B is perhaps a little bit more complicated, because if you're in the business space, it's going to have to be something very specialist, and quite often business to business transactions are through in-country agents or perhaps distributors. But I've set a number of these up over a while. I set up stores for companies on Amazon across Europe with one of my partners. I've done B2B setups across Europe and into other areas of the world. So I do understand it, but you must first map out what you're going to do. That then gives you your Incoterms, it gives you your risk, it gives you your cost of ownership, it gives you an understanding of your duties. And then you get all this swirling all around, you then completely understand how you're going to satisfy your consumer demand. And even if you do something like your own website, or there's lots of things there, including making sure that the language used is the language understood by the consumer. Something I would always say to people: try desperately to avoid a translation package if you're dealing with a country. There's nothing better than in-country voice at the end of the phone. At the end of the day, it's there to sell the product. So thank you. Kevin, please. Thank you. So that then gives you a whole range of things to consider when it comes to customer support. Helplines. You know, we're all consumers one way or the other. There's nothing more frustrating than not getting the advice we want, or feeling that we are sort of pushed away, or our question is not answered. So if you're going to set up helplines for exporting goods in country, test it, spend time on it, make sure that the users understand it, have very clear agreements with those people, and don't believe what you're told unless you check it yourself. I've set up quite a lot of these for people in lots of different languages, and always have found that employing people in country is the best way, but training them with own country staff, spending the time and effort, costing it in to make sure that that's understood. At the end of the day, they are the interface with the consumer, and it is the brand that gets smashed to pieces, and the relationship only continues to sort of go downhill without doing it well. So product support options, this is again a complicated area. This is dependent on countries. Some countries have a culture of having, let's say, products to swap. You know, your individual item breaks down, they are used to having, you know, a lone item, you know, particularly on white goods, you know, washing machines, tumble dryers, that type of thing. But it covers across a lot of things. You need to understand that, you need to cost it in, you need to make sure it can happen, because if not, again, your opportunity is being diluted and possibly wrecked. And then very much an area that people don't fully appreciate is the subject to reverse logistics. Right, I'll just explain that. So product returns, for those who wouldn't know, online returns, dependent on the type of product, can easily be 25 to 30% of the initial sale. Of those, it's highly common that 50% of them, there's absolutely nothing wrong with it. You know, the consumer ordered a blue one and a green one and sent one of them back, but often on the way back that has not been packed properly, or something's missing. So all those things need to be structured in, but that needs to have a very slick system, and it needs to have clear expectations, including data capture, understanding the consumer, making sure that the knowledge is there. It might even reveal that there's a product problem coming up. It might mean that the service that was suggested isn't working. You know, everyone thinks it does, but it doesn't. Just an example of that, I did some work with one of the larger high street retailers on this. It's a bit of a specialism of mine, on TVs, and they had a whole range of TVs kept coming back. They could not understand why they come back. On checking them fully and doing it properly through the eyes of the consumer, one of the menus had a glitch in it, and if you press the button not quite correctly, the whole screen would flip into a different language, of which was not covered in the instruction book. So it just meant that the only thing the consumer could do, apart from feeling like they're going to throw it through the window, was return it and become incredibly frustrated, and probably do the one thing that we all do as consumers, is vote with our feet and just bought something different. So reverse logistics is a lot more than just picking up returns. And as we move into more online sales, that is going to grow and grow and grow, with lots of issues around sustainability and so on and so forth. So much to put in there. So anyone who's exported must consider these areas. Okay, Kevin, please. Okay, so we've gone through quite a lot of things there, and I'm getting my eye on the time. So again, if you're exporting, you've got to make sure that you're picking up you've got your total cost model driven fully through the business and validated with independent expertise. So you need to make sure you've got every single thing in there. I touched on it a little bit on import, but your logistics costs, your storage costs, your cash flow, your risks, all of those things must be going into it. But they should also include the softer things like the skills and availability of your key team. Yeah, can they cope? Do they have the skills? Do they have the bandwidth? You know, if they've got a full-time job before they even start any of this. And far from least is how you're going to payment. How you're going to get your payments. There's many excellent systems around, but still a lot of people are trading on letter of credit terms. I don't think that's going to be a shock to many, but it's a very expensive way of doing it. So that needs to be considered fully, but that all goes into the TCM model, sorry, total cost model, making sure that then when you're outputting that, you fully understand it, and then as a sort of business, it can be checked by its financial support, looked at carefully and challenged on a positive way. You know, what are there? So moving on, brand protection legal implications. Well, so often not dealt with properly. Brand protection is a lot more than just the legal side of it. It's actually understanding how you are going to protect something that's been invested in, looked at, nurtured, built up. Yes, you can use trademarks, copyrights, but it's also about the attitude of your partners and how they behave. So spend a lot of time on that and make sure it's covered in a way that it can be dealt with if there is truly a problem that can't be dealt with sort of by speaking. So many times trademarks are actioned and then discovered that in reality the country that you're trying to deal with it in, you are just lost in fog. So it just needs to be done very much from an in-country basis, I would suggest. Product safety accreditations, there was a question a little bit earlier about America. Just as an example, America has often different product safety and accreditation needs than other places. Doesn't mean they're wrong, it just means they're different. So that type of thing needs to be fully understood, and that can be understood by various specialists, yes, but it can be found in commodity coding, that type of thing. And then often what people will do is make sure that they use third-party accreditation agencies to to check that all the things they're being told or they think they are buying as a service is actually true. So there's many of those around. There's some very, very good ones. They can be used to just protect the business fully. You know, that to me is an investment. It's not a cost. That's the cost of failure far outweighs the cost of doing it right first time. So, Kevin, if you would like to change for me, please. A little bit lighter here. I thought I'd just show this more graphically. This is slides prepared by one of my BHP colleagues, but it's something I would use, but it's very easy to say. It just gives a very, very sort of short overview of if you're going from the UK, you need, and into Europe, you know, you need EU documentation, you've got potential payment of import duty, you've got import VAT. So that's the knowledge that will be needed and structured and put in. So Kevin, please. So the reverse of such, if you're importing, you're going to need EU export documentation. We touched on the ORI numbers. You're going to have to make sure you're compliant to UK import documentation. You've got possible payment of import duty. You've got this dreaded double duty thing that people seem to have all sorts of problems with, which is understandable. That is something that you're going to have to, as a business, look at and say, well, is the cost of managing it out of my business greater than the cost of paying the duty? Most duties sort of between 2.5–5%. There are variations, of course, but the advice from the UK government is that by the time you take the total cost of ownership and maybe employing 1 or 2 people to actually work on your duty side, subject to your business size, actually you might find it cheaper to just pay the duty. So just a simple little graphic there. Kevin, please. So various documentations I touched on earlier, but there's always this single admin document. This always accompanies things. This is basically all part of the upload system, but it will also need this massive input onto your commercial invoicing. It will need your transport documentation, and I really make the point again for clarity. If you're going across many borders, arm your carrier through your professional support with multiple copies. You know, it's so often that people will set off from the UK with one set of documents and then they are taken by the first country, and then the transportation is stuck and needing to find a way of getting further documents. So make sure there's enough copies. Okay, so Kevin, please. So if we just look at that point about import duties, something that I find this probably the easiest way of saying to people, you know, you're determining your duty by what is it, i.e. commodity codes, what's it worth, where's it from. So those 3 segments are the drivers. So it's a very simple way of keeping track on it. If an individual business cannot answer those questions, then it's going to, without question, get into difficulties at some point, and that difficulty invariably falls down to the goods get stuck at customs, or, you know, the customer hasn't got, and lots of costs, and we're tearing our hair out because we can't fix it. And it generally has been proven to originate somewhere in these 3 boxes. So Kevin, please. Thank you. So I said about commodity codes earlier. I just thought I'd just show you what the detail would sort of look like. This is a snapshot from the government website, so you can sort of see that the duties are all over the place, which is why it's so important to understand it. Obviously, this is, as I said, drives your duty and VAT. It drives this UK global tariff, and we do have this benefit that we've had duties reduced, part of the sort of trade agreement, shall we say, but they're not eradicated, and this is the bit that's sort of been a bit of a shock to people. I don't think everyone's fully understood that, but there we are. Kevin, please. Thank you. So finishing the point on valuation, then, they are complex. There's a lot of methods to calculate. Normally it's against your transaction value, but you have to consider you've got royalties, licensing, commissions, tooling, and if you're not transacting and you're moving your own goods, then you've got to look at that. All of these things come, I would suggest, either from a tax specialist or a customs agent if you're doing a lot of value. But these are the things that are headings there to cover. I'm not intending to go into all these in massive detail. I'm just giving this as a headline for people. So Kevin, please. And there we are. This is about country of origin. So this is just to show how it gets incredibly difficult to sort of look at it. If we look at this is just a classic. You know, you've got bits coming from different countries. So where's the origin? So there's arguments over whether it's changed its commodity code, whether you've added value more than 40%. All of these things are actually important to validate, but they're only able to be validated by mapping out your process properly and then understand it. So I help businesses map out the process properly. I help them to match where the import's from, where the export's going, and then to work with one of the BHP tax specialists to actually make sure that we can absolutely minimize the duties. You can't in all cases, but what needs to happen is to clearly understand what it sort of can do and should do. Now these are areas that you can get lots and lots of support from. In one of the areas that's often not always looked at is setting your stall out properly before you start. So import duties, this is the final bit that people fall down on. It is no longer as simple as it once was. It's incredibly complex. Many people would argue that it's better to pay the duty than to put all the infrastructure in to do so. That's a business choice that comes out of the total cost model, and again, that's a specialist area, but I just wanted to show this. So Kevin, please. So okay, so if we sort of try and look at this then, so businesses will either need to use their ERI numbers properly, you know, UK, EU. You need to look at your ability to file customs declarations, either using the transit system or the chief system, which are all through customs structures. You have your agents in place to help you. That's dependent on value. They could be customs agents, they could be freight forwarders, they could even be specialist accountants. It doesn't matter, but you need to understand it. But you've got to face that there are costs. You've got a built process, and you've got to understand the capacity requirements to do so. So what the business will need before it does anything else is to map what it's trying to do and why it's trying to do it, and then understand, is it sensible for it to do it that way? And that's very much where I come in with people and just question and help and support. So there we are. Kevin, please.
Okay, so we have a few questions.
I was trying to get to the end.
Yeah, that's fine. One of our clients has had problems with imports due to different packaging requirements. Can you comment on this, please?
Yeah, that again, unfortunately, is far from uncommon. If you're commodity code is at all unclear and you require some clarity, there's two sort of normal routes. That is to discuss it with HMRC. They are generally very, very helpful people. And then if they are not able to help it, look at your commodity code options, and quite often people find that changing the commodity code type or use of helps them with that problem. But the place to start with, if there's lack of clarity and it's changing, is actually try and discuss that with HMRC, who are the arbiters of it really, and see how you get on. If you continue to have a problem, then I would get involved with that, for example, but so would your freight forwarder, but so would your customer or supplier, depending which way the transaction was, to try and overcome it from each end of the spectrum. But it's incredibly common, and this is one of the errors that are coming up. So my advice is start with HMRC and work down the list. They are helpful and they are charged to be helpful. So hopefully that answered that.
Okay. Thank you. We've come across a situation where a client who is the importer and has a VAT postponement arrangement in place has had goods sent direct to customers from an EU supplier who's used UPS. The UPS have insisted VAT be paid before they deliver, which has delayed delivery and not in accordance with postponement. This appears to be a problem apparently with many carriers. Is anything being done to resolve this centrally or to get UPS to comply with importers' VAT terms?
Interestingly, I attended a logistics webinar where a lot of the major carriers were on, and this has come up, and there's been, let's say, different views of how this should be applied. If this is not able to be clarified by the carrier, again, it's HMRC. If it's in a position where the carrier of choice is saying something different to HMRC, then I would suggest maybe talk to another carrier and see if that's something that they do. They do not all react the same, and it is again an area which has caused so many people problems. But it's this inconsistency. It might even be posed by the country that the goods are going into. So it would be unfair to say it is just the carrier that's causing the problem. It might be being driven by the importing country, of which it's not uncommon because they are all able to act slightly differently, and regrettably that's one of the downsides of not being in a customs union. That's not meant to be a political point, it's just the issue. So start with HMRC and then go back to the carrier if the advice from HMRC is different to what's being applied by the carrier. But I make the point, it is highly likely to be driven by the individual country that's in the trade.
Okay, thank you. If a UK business is selling product to a customer in Ireland, but goods are being shipped direct from France to the Irish customer, will VAT on the sale be chargeable as an Irish sale and reported on their Irish VAT return, given that they've had to register for Irish VAT?
I'm not really the best person to answer detailed tax questions, but what I would say is we within BHP do have a tax specialist, but that can only be answered by actually mapping out the process and actually checking that it's fulfilling all the rules. It does seem like that many companies are using this route, and dependent on how it's done, it is perfectly okay, but you need to take specialist advice based on the actual process used and make sure it's compliant with all aspects of HMRC's guidelines. It's not one size fits all, I'm afraid, that one.
Okay, and who at HMRC do we contact regarding problems?
Well, you can go into HMRC and talk to one of their customs specialists. If you are unsure of who to go to at HMRC, Department of International Trade have a help desk of which can be accessed which will drive the information to the right area in HMRC, either by function or by regionality. But your generally a usual contact with an HMRC is should and would normally sort of suggest who to speak to. I normally would be speaking to a international tax specialist with an HMRC or a customs specialist. They tend to carry slightly different titles regionally. I couldn't explain that one, but generally it's anyone who picks up international trade. So be persistent and you will ultimately get there. But DIT can do it, International Chamber of Commerce can give you names, or certainly contact the tax advisor at BHP and they can also guide you into the right place. But from a government perspective, they are actively encouraging, that's a nice way of putting it, HMRC to be very helpful in this. So there we are.
Okay, thank you. Well, we'll draw it to a close there. Thank you everybody for attending today. Paul, can I thank you personally for you coming along today and giving us a really comprehensive webinar. I know many of our members have found that really useful, so thank you very much for that. We will be sending round copies of the notes, as I said, and a copy of the recording if it comes out okay, so everyone can have a copy and listen to it again. If anybody does have any questions, please let us know, contact us, and we can put you in touch with Paul directly so that you can discuss any issues you have with him. Thank you again for listening. This is one of our monthly webinars that we run throughout the year for our member firms and selected guests. We will be having another one next month. I think it's the 5th of May for the next one, so hopefully we'll speak to some of you again then. So in the meantime, Paul, thank you again, and we hope to speak to you all again soon.
Yes, and thank you, Kevin, and thank you for all for attending. Bye then.
Bye now.